We're coming to the end of what has certainly been a whirlwind year for the financial markets. Now, as we look ahead to 2017, I'm joined by our LCG senior analyst, Jasper Lawler. Jasper, thank you very much for joining me. Now, first of all, I want to talk about how politics is increasingly kind of driving the equity markets. We've obviously seen with the Brexit referendum that we had in June and the US presidential elections in November. Let's talk first about kind of UK stocks. Where do you see them heading in 2017 in terms of sectors?
Well, obviously, Rowena, Brexit has been the big game changer in 2016. I think there's a good chance that it continues to be so in 2017. The first hurdle is the Article 50 being triggered supposedly at the end of March, if all things go according to plan. The fallout from that, the uncertainty that's possible, the potential for a further drop in the British pound and the effect that will have on prices for consumers, all affects how well the FTSE 100 can do in general as an index and relatively against other stock indices in Europe, but also which sectors do well. So just looking over the last year, commodities have done very well. So you've seen commodity miners like Glencore do very well. Retail stocks, where there's a feel that actually this consumer spending is going to fall off a bit, they've not been doing so well. The likes of Next, obviously you've not been shopping as much there as you should have been. So this is the question. British pound and whether these sectors that have outperformed, underperformed, continue to do so next year. My suspicion is that the British pound can recover a bit against the euro, and obviously we're going to talk about that in a bit more in detail later, but maybe not so much against the dollar. And so that pound effect will continue to support the index, but I don't think the currency effect in itself can push it higher than it currently is. So that 7,100 level has been the kind of resistance for the FTSE. It's not going to be the pound that gets us through there. It's going to be better than expected growth after Brexit and domestic firms doing as well as the multinationals to push the whole index higher.
Sure. Well, moving over to Europe then, I mean, we've got upcoming elections in Germany and France in 2017. What about the DAX, for example?
Well, I think if you just put yourself in the shoes of maybe an American investor, if you're choosing where to put your cash, if you're choosing some kind of allocation for Europe, I think you're probably going to put more of your funds into the UK than you are to some of the French and German stock markets, other European markets, because of the political uncertainty has shifted now from the UK to Europe. We have these elections. France will be the first big one, but then it's Germany later in the year. If this populism that's taken over with the election of Donald Trump, with Brexit, follows through and you get likes of Marine Le Pen elected in France, maybe Angela Merkel getting unseated in Germany, then that political uncertainty, we've seen how it initially weighed on the FTSE. Obviously we're higher again afterwards, but leading up to those votes, even if they don't materially change anything straight away, it's just that confidence factor is going to push people out of those indices. I think they'll probably underperform US and UK markets in 2017.
So a lot more market volatility. What about Trump? He's an interesting character, as we know. So obviously now he's the US presidential elect. Trump's interesting in terms of his policies and perhaps what it's doing for US stocks. So what about the Dow Jones?
Well, as we're speaking at the moment, Rowena, the Dow Jones is just pushing right into that 20,000 mark. It's really been on an absolute tear. The Dow Jones, because it has a lot of those big industrial type companies, has really been benefiting. The likes of Caterpillar shares have been jumping higher. Also the big banking names. Two factors at play there. Trump has promised a big infrastructure spending boom. He's also promised to cut back regulation. So banks, the financial sector in general is one of those highly regulated. So if that comes back a bit, that proposes to push their profits higher into 2017. So that's been the trend at the end of the year. And I think if Trump can actually deliver on some of these promises, which is a big question mark, then that performance of the financials pretends to continue. Some of the sectors that have done well over the last year, technology, for example, some of the big popular trading names, the likes of Facebook, Apple, they may actually underperform in 2017, which would be a big change up from the last few years.